Hi everyone, welcome back. I hope you're having a fantastic day. Thank you for watching and for subscribing. In this video, I will give you several tax tips that will help you get a last-minute tax break. I am hoping that you will be able to take advantage of these ideas that I'm about to share with you because they're very, very easy. These ideas will help you increase your tax refund this year. If you own a business, there are multiple ways for you to lower your taxable income too. I will include a couple of them in this video. Remember that the main idea for you is to defer your income, if possible, of course, and to accelerate your expenses. Yes, I know that this is absolutely counterintuitive, as we naturally want to delay paying for purchases and we want to get paid faster. But that's not how it works for tax purposes. So, having said that, my very first tip is extremely easy. Make an extra IRA contribution. Contributions to a traditional individual retirement account can be tax deductible in the year that you make them. There are many rules that apply, of course, but generally, you will be able to take a tax deduction as soon as you make the contribution. You can generally deduct the full amount of an IRA contribution if you and your spouse are not covered by retirement plans at work. What's really convenient here, what's really convenient about this particular step is that you can contribute to an IRA all the way until the tax filing deadline. So it doesn't have to be done prior to December the 31st. Another related idea that I want to share with you today is taking advantage of a Roth IRA conversion. You may opt to do a partial conversion or a full conversion. Here's how it works. A conversion from a 401k into an IRA essentially transfers pre-tax funds to a Roth IRA for future tax-free growth. Of course, there is no free lunch, we all understand that very well, and so you will owe upfront taxes on the converted amount, but if your income this year is unusually low and you anticipate to be in a higher tax bracket next year, a conversion may be an excellent step for you now. Definitely look into this as soon as you can. Tax tip number 3, and this is for those of you who may be self-employed or have a business. Go ahead and defer your bonus into the following year, if you can, of course. Obviously, if you're a W-2 employee and you work for a company for somebody else, you have no control over this, but I know many of you would be able to take advantage of this opportunity. Deferring your bonus to January can potentially help you stay in a lower tax bracket, and it will help you keep the money that you would otherwise pay in taxes longer. The next idea I would like to share with you is take a loss. Needless to say, if you invested in, let's just say, stocks and you didn't cash out before it declined, your positions may be showing a loss. There is a tax strategy called loss harvesting where you may find it extremely beneficial to just go ahead and get rid of a failed investment before the end of the year. In turn, it will give you an opportunity to take a capital loss on your tax return. You will have to sell the stock at a loss first. Just seeing red when you log into your brokerage account, for example, means that those losses are technically unrealized, meaning they're just paper losses, not actual losses. But once you realize a loss, you can use it to offset any realized capital gains that you may have accumulated. I, of course, don't encourage you to go ahead and sell anything at a loss right now, but in some cases, if you do your research and maybe the company is unlikely to recover or maybe it's just really struggling and there is no end in sight, then it might be a good way to make the best of that situation. Definitely do your research to figure out if this is the right course of action for you. The next tax avoidance strategy that I want to share with you is my favorite one. Try prepaying expenses that are eligible for a tax deduction. This is an option if you have other expenses that you can deduct to itemize instead of taking a standard deduction this year. This is more difficult to do if you don't own a business, but there are still really good options. For example, if a medical procedure is necessary. There is a tax break for unreimbursed medical expenses that exceed 7.5% of your adjusted gross income. So that might be something you could look into. But just remember that you can only claim this if you itemize your deductions. So far in this video, we covered 5 tips to help you get a last-minute tax break. We talked about increasing your IRA contributions, the benefits of converting to a Roth IRA. We talked about selling bad investments, deferring your bonus to the following year, and prepaying expenses that are eligible for an itemized deduction. Now, the next tax avoidance strategy I will share, tip number 6, is extremely easy. If you are married, you have an option to rethink your filing status. One of the first decisions that you make when you start your tax return is to choose a filing status, and that can affect your refund size. About 96% of married couples file jointly each year, but a joint return is not always the most beneficial option. If you're not married and file as single, you may be able to cut your tax bill by filing as head of household if you meet the requirements, of course. Here's what I want you to know. Married filing separately status does require just a bit more effort and time, but it may result in a bigger tax refund for you. You may qualify for tax credits and tax deductions that you wouldn't otherwise. For example, if one spouse has significant medical expenses, filing taxes separately might actually allow for a larger deduction. When it comes to single taxpayers, many taxpayers who care for elderly parents don't realize that they can claim head of household status. So if you provide more than half of your parents' financial support, even if they don't live with you, you can likely file as head of household. So all of these things are worth looking into because they will help you get a bigger tax refund this year. As you can see, there are many options that you can use to save money on taxes. Every bit counts, right? Thank you for joining me for this video. Make sure that you follow me on YouTube and on Rumble. Give this video a thumbs up and consider sharing it with your friends and family, those who may need some extra help with their taxes this year. Thank you for watching. Thank you for your time. I hope that you have an amazing rest of your day, and remember to check back soon for new content. I'll see you in my new one soon. Bye for now.